Good morning. Good morning, everybody. Hello. Thank you all for coming. For those that don't know me, I'm Ben. I'm a general partner at Side Stage Ventures. I want to start by acknowledging the traditional owners of the land on which we gather here today, the Wurundjeri people of the Kulin Nation. We pay our respects to elders past and present. Thank you all for coming. It's so good to see so many people here. We were a bit worried actually when we squeezed it in on the morning before the public holiday whether anyone would show up. So it's actually been great to see such a good turnout. For those that don't know us, don't know Side Stage Ventures, we're a collective of founders. We invest together in the most ambitious Australian founders. And we do that by building the venture product that we wish we had when we started out. And we're very glad to see a lot of the founders that we've backed here today. So thanks, guys. Why don't we start by just seeing who's in the room? So if you are a founder, would you mind raising your hand? That's good. The marketing worked. Okay. And if you are an investor, do you want to raise your hand? Okay. Good. And finally, can I ask the Side Stage team and partners just to raise your hand as well? I'm not going to talk too much about Side Stage today, but if you want to learn more, then come speak to one of us. We'd love to chat more about it. One of the things we get asked most as kind of in our capacity as investors and as founders, I think, is how do I raise money from the best VCs in the world? How do I raise my Series A from the best VCs from a tier one VC in the US and Europe? And that question is a lot of the inspiration for why we put on this event. It's a really, I think it's a really unique opportunity. It's very rare that you get partners from two of the best firms in the world in Australia at the same time, and to have them in the same room alongside Alex, who has really been through the rigor when it comes to fundraising globally. It's a really great opportunity. So I'm glad to be here, and I'm glad you're here too. So without further ado, let's get started. Let me quickly introduce our panel. Georgia is a partner at Index Ventures in London. Welcome, Georgia. Thank you. Rebecca is a partner at Insight Partners based out of New York. And you all know Alex, who is the founder of Linktree and also a venture partner at Side Stage Ventures. So let's kick off. Sorry. So the first question is actually to you, Rebecca. You found Linktree from the other side of the world and decided to. Insight led I think it was a $10 million Series A in the middle of the pandemic. How did you find Linktree and why did you choose to invest in them?
First of all, it's great to be here. Thank you so much for the warm welcome. I've told Alex I'm already plotting my return trip to Melbourne because it is awesome here. So how did we find Linktree? I think there's a bit of context that's helpful in terms of Insight as a fund and how we work. So background on Insight, for those who don't know, we're actually investing out of a $20 billion fund. It's our 12th fund. And we invest across stages. We will write $5 million Series A checks. We will write $500 million pre-IPO checks. And we will do everything in between. We specialize in software and software-powered businesses. And we have a really unique way of actually sourcing companies that we've really pioneered in the industry. And that is we have an army of 40 to 50 really young, bright people that we hire directly out of undergrad to go and talk to every single company. And so in a given year, that cohort of people will actually talk to about 50,000 companies around the world. And we're tracking in our database, which we've gotten fancier and fancier with over the years as we've invested in scraping technology. We track about 200,000 companies in our database. And so we believe actually in a very bottoms-up, boil the ocean approach to finding the world's best software businesses. We ultimately invest in like 0.1%, right, of the companies that we track and talk to. So Linktree is one of those businesses. How did we actually discover them? Well, I can't take full credit because Linktree has actually been in our database for years. People are always surprised, and some of you may have even gotten inbound emails from an insight analyst. If they do reach out, actually talk to them because you might end up as Linktree. So one of our analysts spoke to Linktree kind of early on in the pandemic, and Alex might even know better than I do how they accosted you and got through to you. But we have weekly meetings, right, internally where our analysts then pitch us on the companies that they've talked to that week. And as soon as I heard about Linktree, which I think we'll get to in a bit in terms of the why Linktree, but I immediately was like, you got to get me on the phone with Alex right away. And so we just, I think because we have such a deep set of information across the market, like when we see something we like, we kind of know immediately and we run at it. And so between that first conversation with the analyst and me talking to Alex, maybe was a week. And I think I told you on that first call, like, I want to invest. And so that pattern recognition is actually how we identify what we really love. And of course, then we vet and we make sure that it meets all of our other criteria. But that's how it worked for us, is we boil the ocean and we try to find the very best things.
Wow, it's an amazing insight into the process. And actually, this similar question to you, Georgia. You guys invested a little bit later at the Series B, but what is it that got you excited about Linktree?
Yeah, happy to go into that. And I think it's the perfect contrast in terms of setup of venture capital funds. Yeah. When I think about Index and Insight, I think, just for context on us, we probably have, the direct opposite model, but, clearly looking to invest in the same brilliant companies. So we're set up sort of half our team are in Europe, half our team are in the US. We keep our team relatively small, so it's about, in total, across the investment team, less than 30 people. Half you sit in London, half you sit between New York and San Francisco. And our approach is very much kind of not to boil the ocean, but also to kind of be end-to-end when it comes to finding, diligencing, and working with companies. So I actually came across Linktree in an article I was reading and reached out to Alex over LinkedIn, and that's how we initially connected. But in terms of why we were excited about Linktree, so I think there are a couple of things that we always looked for when we think about kind of hallmarks that get us excited. The first is, do these founders have a proprietary experience or insight that make them better positioned to take on this challenge than others around them? Like, if they have a good idea, then someone's going to copy their idea, be it now or going forward. And if they've got, some good traction, again, people can kind of overtake them over time. So what we loved about Linktree from the get-go was Nikki and Anthony and Alex had, saw this problem firsthand and had built a very organic, authentic solution to it. And because they had that insight, they could build a meaningfully better product than what was out there and what continues to be out there today. So that's the first thing, this kind of proprietary insight. The second thing is, our belief is revenue is a lagging indicator versus a leading indicator. What a leading indicator is when it is engagement. So it's product love, retention, organic adoption. And I think we can probably both say we were totally blown away by the level of organic adoption and retention that Linktree, even in the bare bones of the product, was demonstrating. And particularly across, the likes of like Justin Bieber, Selena Gomez, we invest quite a bit in the creator economy, and often getting celebrities to use your product involves quite a lot of cash, which these guys didn't have and just clearly had solved the need for them. So that sort of organic engagement really stood out to us. And then the third piece was really just the place that, they were kind of building in the internet. We look for people who are building new categories versus playing within existing categories. And what we really loved about Linktree was that they were leveraging this tailwinds of more, different people using different profiles and different channels to express and identify themselves online, and that they were at this kind of almost like air traffic control layer of the internet where they were managing to direct people to different audiences. So both from a thesis, attraction, and a founder level, we were very excited.
Yeah, awesome. It's fascinating to see how the different operations work. Alex, you were, 2020, you're building this creative agency, Bolster. You'd kind of started this, little simple tool on the side called Linktree. When did you realize, you had something magical there?
Yeah, excuse me. I think it's funny because you hear those kind of stats or the way an investor's looking at it. And I think this is something can be common in Australia, is that we're quite sheltered here. And I actually didn't think any of those stats were good or worth talking to an investor about. And so I think I just always assumed those companies out in Silicon Valley will be not will have more than us, or I actually didn't know what the benchmark looked like or what engagement it should be. And so, yeah, I think it took me a while to learn that, or I think once we had started talking to, just kind of learning through doing and speaking to a bunch of investors and realising that they were actually quite impressed with it, it was enlightening. But I think prior to that, the real kind of pinch me moments were Alicia Keys signing up organically and seeing that immediate kind of scale. That happened about a year after we'd started it. And then just seeing that immediate product market fit, almost anything we were doing, given we knew we were the user, we knew really specifically exactly what people were trying to achieve, most things we were doing hit. I think that causes a mentality that it's harder once you're scaled and you think everything's going to hit and you have that same intuition, and the journey kind of requires you to shift that. But yeah, I think we understood that product market fit will get in that engagement. And I think probably the real big one was when the revenue from Linktree overtook the revenue of the agency, which was we were still actually putting most of our eggs into the agency. I think it was a moment we were okay, we need to focus on this.
Yeah, makes sense. And can you how did the fundraising process go? I mean, was it just you had investors knocking your door down from day one, or did you proactively go out to raise a seed round and then a Series A? How was that experience?
I don't know how much Rebecca and Georgia know this, but I knew nothing about venture.
No, that was pretty clear.
Yeah.
which we loved.
I was very green. And I think I wouldn't recommend this necessarily. I think we landed on our feet with it, with great investors. But I kind of knew the basics, obviously, of financially how it worked. But in terms of what people taught me later, don't talk to analysts, actually, again, worked out well for us. But we were getting, I think by 2018 or so, we were starting to get contacted by VC, but we never intended to raise VC. We were quite proudly bootstrapped, didn't even know what that word meant at the time. And yeah, cash flow positive, and just figured we'd continue building it that way as we had done with the agency. The agency was bootstrapped as well. We hadn't even taken a bank loan. So to me, you build a business that way. I think it was as we were starting to get significant scale, and the way Linktree's model works is that it's freemium. So there's a lot of users that we're paying for the service, for the infrastructure of, that aren't actually paying us. And those economics start to get a little bit harder. Also, as the tech community in Australia was kind of building, there were venture-funded tech businesses that were paying significantly above what we could afford to pay talent. And so we really needed to kind of shift that and be able to compete. So we decided to actually at least talk to the VCs that were reaching out at that time, and started to learn about it. We then decided in Feb 2020 that we'll go over to SF and speak to these investors. So we did that. There was about 11 between LA and SF that we're going to talk to. Actually, it was early March. We were there for 3 days and realised we had to get out of the country. We're on the last flight back into Australia. And then we just stayed. So there was a 14-day quarantine period in your house. So my now fiance left the house. Nikki and I stayed in the house, and we just stayed in the US time zone, slept during the day and stayed awake at night and kept those same meetings. So we could just like figure it out from there. Yeah, it was fun. It was a moment in time, that's for sure.
And how many conversations did you have? Like how did you think through that process? What were you looking for at the time?
Yeah, so I think that's the part of it, like we kind of figured it out as we went, because it all started happening really quickly. We decided realized we had this traction, figured out how to put a deck together, and just basically would do a meeting, realize what I got wrong in the deck, and just keep iterating on it immediately after the meeting. And then they kind of just started, is there some kind of like VC grapevine going on? Like once I started talking to 3, there was about 30 or 40 emails a day from VCs reaching out. And I just kind of thought the approach was talk to all of them. So that was a few weeks of just doing that. And we kind of ended up doing it over a few months. So I think at that point, Airtree had already, they had recognised something in us. I think that was the first moment. There were a couple of other investors in Australia that had turned it down. But they really helped me understand what this world is, how to put the deck together. Airtree really dug in, did a lot of really deep diligence. Again, helped me understand actually what metrics matter, put that piece together. They then said, okay, we're really keen to back you, but we can't write a check big enough to lead. So go find you. And we had already also decided we wanted a US lead, given majority of our users and revenue comes from the US. And we'll have to likely build a team in the US. And also really the other big reason we're raising was team. It's kind of challenging, it was challenging then, less so now, to find the help and the assistance and advisory in Australia for scaling a consumer business and the amount of scale we were starting to see. And so I was looking to get the right people around the table. And so we knew we needed to look to the US. So great to have, and we also knew we wanted an Australian follow-on investor really, because I really believe having boots on the ground in Australia and understanding this market would be really helpful as well, which absolutely turned out to be the case. So we're happy with that structure, and then basically spoke to everyone. When I spoke to the Insight team, I really loved their approach. They knew everything there was about Linktree, but actually at that time, we're still trying to figure out how to explain Linktree. It was, for how something looks so simple, it's actually really hard to explain. The question then was like, why is this working? Like, why is this doing what it's doing? And what is your plan? How are you thinking about it? And actually, when I first spoke to Rebecca could explain Linktree back to me better than I could explain it myself. And that was probably the first investor that I spoke to that wasn't just drilling me with questions, trying to figure it out. It was like she had formed her own opinion and actually nailed it, and that's why we lent him to Insight, even though Insight wasn't necessarily the style of firm that people would have expected we would go to, given the term sheets from other firms we had.
Yeah, no, that's awesome. I think just moving on to kind of the next Linktree. So, plenty of founders in this room will be thinking through this question now, which is, we've got some good traction. We'd like to, we think there's something interesting here. Do you have any advice for founders who want to attract the interest of, some of the top VCs overseas? Like, how should they be thinking about it? What would you advise? I don't know, George or Rebecca, who wants to go first?
What would I advise? I would say 2 things. So this might be an unpopular opinion, particularly having spent the last couple of weeks in Australia. I would say we are looking to invest in tall poppies. And by that I mean not people who are like, crowing about their successes and, sort of overly confident, but people who really stick their head above the parapet and are wanting to build something different and sort of bigger than what they know. And the reason why I think that's relevant when we think about how to get in touch with us is that, it's really trying to demonstrate that through probably an outbound approach, right? It's trying to show that either what you want to build or what you have built is meaningful, and how it's different from, the 30 other emails that we're getting every day. So I actually, it's probably not very original, but I genuinely think a really well-written email, which is still so rare to receive, is a really effective way of doing it. And I hope Alex won't mind throwing him under the bus, but just to take an example of what not to do. So once we like signed with Linktree, we started working with them, and Alex is like, God, I'm so excited to be working with Index. You were actually the one fund I reached out to. And I was like, oh my goodness, like this is bad from us. Like how we've taken a year to basically catch up with someone who's reached out to us. Like we need to assess our approach and make sure that we're not missing these gems. Anyway, turns out Alex had got the wrong email address for a partner that invests solely in AI and deep tech, and sent an outbound email to him. And I think that was a great example of like great intention, bad execution, but also just almost well thought through, but not quite well thought through. So it's unoriginal, but I think it's a well written outbound email or LinkedIn message. Like we do read them. We're looking, we're paid to invest in businesses. We're looking to invest in businesses, but really making that clear from the get-go about why you're different, or, in the case of Australia, a taller poppy.
I told you I knew nothing about venture.
Email addresses aren't.
Venture, common sense.
I felt, because I was really teasing Georgia about that. I was like, you missed us. And she's like, hey, can you send me the email you sent? And she's like, you.
I think I'm going to echo a lot of what Georgia said. I think there's three things. First, actually have a venture fundable business, right? And this is, not all businesses are suitable for venture funding, and that's totally fine. But like understand why venture dollars are actually going to meaningfully change your business and why you want that sort of business, right? So like really ask yourself, like, do I have the ambition to go and lose 100% control of my business so that I can build something so much bigger? And that is not something that is suitable for every business and every founder. I think the second thing, similar to how Georgia was describing the email, is like really nail the story early on. I think later, and usually we have the privilege of relying a bit more on metrics, but later in your business, there are other signals, right, and proof points. But if you're just getting started, you really do have to be able to nail the narrative and the vision and the story, especially for early stage investors who, again, are getting all of this inbound and have to sift through it and try to identify signals without metrics. And then the third thing I would say is pick a partner, not a firm, right? And again, this sounds like another thing that happened where if Georgia got that email, who knows? Maybe I wouldn't have had the opportunity to invest in Linktree. So thank you for messing that up. But the firms have their own brands and their positioning in the market. But at the end of the day, you're picking an individual to work with you, right? And so make sure that you really vibe with them. People always say it's like you're getting married. You will spend a lot of time together, and it's a lot harder to get divorced in the venture world. So definitely make sure that you have a connection with the individual you're working with, and be thoughtful about it.
Yeah, good advice.
I think that, at that stage, correct me if I'm wrong, I don't think you were doing a huge amount of early stage stuff at that time. And so when I didn't know a huge amount about venture, or like the landscape of investors. I just really liked Rebecca. And so I think when we did it, people were like, wait, it's like they were a bit confused about my choice, given the other firms that were interested in. I was like, I just liked Rebecca. And I think actually, since then, you've done a lot more early stage. And I think actually, we absolutely made the right choice, given the relationship we have and the power of the firm and everything.
Yeah, no, thanks, guys. So from the other thing that I think I'd love to talk a bit more about, the macro environment. I feel like being in Australia, things sort of happen in the US and then in Europe, and then they reach us. So I always find it interesting to, hear from people who are kind of deep at the coalface in the ecosystems over there. But how have you? It's obviously been a very challenging time for a lot of startups and venture firms and everything. But how are you as a firm thinking about investing over the next 12 months? Has your cadence, has your thinking changed dramatically in the past couple of years? Where are you at? Well, Rebecca, you can go first this time.
Look, I would say it can't be overemphasized how different the market is right now. I think if you look at the last 12 to 18 months, crazy sugar high from COVID, and that is truly come down to earth and maybe even below that. Just to be candid, right? This is more for later growth stages is where especially you see that delta. But even in the early stages, I think deal flow, deal activity has really dramatically slowed. And I mean, it's for a lot of reasons. Correction from COVID craziness. Really good companies are overcapitalized, so everyone is just thinking about how do I take advantage of the cash that I have? How do I extend runway? There's a lot of uncertainty around, are we going to have a recession? How deep will that hit? There's a lot of geopolitical unrest, right? So the macro actually feels pretty bleak. That being said, on the flip side, it is true that a lot of venture funds have really deep coffers right now. We raised a ton of capital. We closed our $20 billion fund in February of this year, right? So we're absolutely on the prowl and looking for stuff. I think it will accelerate again when founders and funders' idea of what a good transaction looks like it intersects more commonly than it does right now, because I think there's still a little bit of a disparity. And as companies start to drain the balance sheet that they've raised over the last few years. The other thing that I'll note, though, is that I do genuinely believe that some of the best businesses will absolutely be built during this time, right? And you can see that in every single recessionary environment we've had up until this point, whether it's the Great Depression and Disney starting in 1929, or in 2000, we had Google, Salesforce, Alibaba, all in that recessionary environment, or in 08 and 09 when we had Airbnb and Slack and Uber and Square. So absolutely amazing generational businesses will be built right now. The deal environment's hard, and you're gonna have to have such a higher tolerance for really treading water and making it and fighting for that capital in order to become one of those businesses, but we're absolutely looking for them.
And that was $20 billion fund, just in case no one heard it. So it's a lot of money to deploy.
Yeah, I definitely echo everything Rebecca said. I think, look, the macro is worse than we've seen it for a while. We're also seeing it already affecting our portfolio companies when it comes to enterprise contracts slipping or people not hitting their forecasts. So the macro is pretty pessimistic. I would say two things of we're kind of like we're not economists. I think if anyone thinks venture capital economists, then they're lying to you. We're very much within the micro, right? So we only kind of see a very small pocket of what's happening. But for us, what's actually pretty exciting about this time, and echoes Rebecca's point, is that we've found, particularly in the last 3 years, like there's just been so many people trying to found businesses and to raise money, and a lot of them have maybe raised money on more kind of opportunistic ideas or things that they maybe feel that they could make a kind of quick buck in. We saw that a lot within the crypto space, which is why we kind of quite intentionally and arguably quite contrarian of us stayed away from that space. We were just seeing a lot of the types of DNA and founders that we weren't excited about working with. So what we're excited about and why we just launched our second Origin fund, which is a seed fund of $200 million in addition to our venture and growth fund, is because we're really excited to back founders who, despite the macro and despite the reasons why they shouldn't be starting businesses, are still starting businesses. Because these businesses are 10, 15, 20-year timelines, and really their kind of ambition and kind of conviction in what they're doing isn't swayed by the macro. So we're really excited about this year. We're excited about ecosystems that, just by nature of them being less developed, have more of a bootstrap mentality or more a kind of do more with less, because often you get that then DNA in founders that can go sort of a longer distance with using less capital or hiring a smaller team. I would say backdrop pessimistic, but still obviously, I mean, we have to be optimists, right? That's our job.
Yeah, no, awesome. And thanks. And Alex, I think you from a slightly different perspective, you obviously kind of raised a lot of money in 2021 and had I think it had to move very fast. How's your thinking changed given the macro environment in terms of how you manage and run the business?
Yeah, I think it's I mean, firstly, that shift obviously from last year was still, actually even still to the kind of midpoint of last year was very much all systems go, scale as quick, probably Q1 of last year, where, you know, we had raised in March. Even just before then, it was like, the assumption was we'll probably raise another 2 or 3 times even that year and like just go. And then by June, that had shifted pretty quickly to, that's not going to happen, preserve cash. And then it's kind of just continued going that way. And so we've had to continue to adjust how we're thinking, really. And that's kind of, you know, when we first raised that capital, we were bootstrapped, cash flow positive. We tried to really maintain that mentality and just knowing that we have a bit more of a war chest. And as we raised more and more capital, we got into those bad habits of just, and I think majority of the industry did, where it was like that pressure to just scale the team as quickly as we can and take advantage of this opportunity. We obviously, you know, shifted that mentality and started to go much more into a sustainable method of growth, understanding it is a much longer term play. And I think actually the surrounding environment not having that much pressure downwards on us actually allows us to have that space. So I'm actually quite enjoying that way of like being able to go back to being a lot more thoughtful and sustainable, back to my roots of understanding bootstrapped sustainable growth without having that pressure of necessarily a revenue growth target or the need to basically spending 80% of my week hiring and scaling the team. It's more about how do we get operational rigor, how do we get really efficient, and how do we focus on unit economics and the things that really matter that will give us that long-term growth. Yeah. And there's like way less pressure from, you know, there was a period last year there was a new attempt at a competitor to us every week, not just from like clones of Linktree and like smaller startups, but all the big guys, all the big companies really like are spinning out some form of Linktree competitor. And now with the market's changing, they're all protecting their core as well. They're spending less time on strategic bets, and it gives us the space to really own our space. Yeah. So it's a bit of a shift.
Yeah, I think it's a really interesting point in terms of how, you know, founders shift from this kind of full-on, like how people now are thinking a lot more about building sustainable business models. I guess from the other portfolio companies in your portfolio, how are you finding founders managing this shift that Alex talks about from kind of, you know, 1 minute your investors are saying, you know, go as fast as you possibly can. The next is slow down, don't spend any money. Like, how is that mindset? How are people managing that mindset shift?
Look, I think it's painful. It's really hard, right, to have whiplash. And we all recognize that we are part of the problem, right? Like a year ago, we're saying, guys, we gotta go, because capital was cheap. And candidly, it's the right advice when capital is cheap to go spend capital because the opportunity cost is so low, right? But the onus is on us to, as soon as we see things turning, warn our companies as quickly as possible. And from the company perspective, from the founder perspective, completely understandable that it is incredibly frustrating and psychologically twisted to hear 2 very polarizing messages in a very short time frame, right? But I think this is one of those moments where you come back to, wow, the founders that I knew had it in them are the ones that are really going to be able to figure this out. And there definitely are patterns in terms of the types of founders who've taken that, absorbed it, and immediately put it to action versus those that are waffling and maybe still don't quite believe it. And look, founders are optimists. As Georgia mentioned, we're all optimists. And so sometimes it's a double-edged sword, right, to combat that intuition around, but things are going to get better. What I've seen, though, is that those that had a real business or have had to survive on very little, eat what they kill, similar to the Linktree guys, right, where they had to grow their business with the revenue they generated, those are the ones that are, I think, going to be able to take all of this input and actually transform the way they operate much faster. But look, it's hard. And I think it's going to take time for everyone to come around to the new world.
Yeah, definitely echo what Rebecca said. I think, look, we've been unable to differentiate between a good business and good execution for, like, I would say, you know, more than 3 years now. Finally, we're starting to see that, and it's only going to kind of show more over time. And finally, actually, founders and teams have an opportunity cost or have to make trade-offs to what they're doing versus doing all things at once. Definitely agree in terms of how quickly it swung. I do think it's arguably one of the hardest things as a founder or a CEO to do, but arguably one of the most important things, particularly as your business gets bigger, is that ultimately you're going to have different perspectives and different opinions all the time. Some people are going to say go, go, go. Other people are going to say hold back. Some people say you should hire this person. Other people say you shouldn't hire this person. And really taking on that feedback, absorbing it, but ultimately kind of crystallizing your own conviction and your own sort of standpoint is so important, right? Because with a lot of this, to Rebecca's point, we're optimists. Like, we're all investing in something that is not quite there yet. Like, we believe it can be there, but we're investing in still a vision. So we're looking for people who have high conviction in their decision making and their vision, and then we can build conviction, right? If people don't have it themselves, it's hard to build faith and conviction in them. So I think it's really being, that sort of crystal clear on now what folks want to do and the trade-offs that they want to make, which is the a lot of the conversations that we're navigating across the portfolio right now. And it's kind of, again, it will sort of be very I think revealing over the next year of how then things play out.
Yeah, and I think actually moving on from the current pessimism and down gloom of the world, I mean, looking forward and looking over the next decade, like, what, as investors, like, what are you most excited about? What are you most what are you spending your nights, like, spending time on and getting excited about? And don't say AI.
I'm happy to kick off. So, look, the first thing, and I think, again, different VCs approach it differently. I would say we have theses, but really we're not thesis-driven, we're founder-driven. So I guess, in short, we're probably spending more of our nights trying to understand how we track people and find talent signals when it comes to people going to companies versus building a top-down thesis on, be it AI or some of these other pieces. The reason why is that, we have kind of, our model will typically be that, say we invest in 30 companies over a fund, 25 of those companies won't go anywhere, 3 may do relatively well, and by relatively well we mean, a couple of $100 million exit, and then 1 or 2 will return that fund and more. So we're really looking, regardless of the category, and we've done a lot of different categories, be it in fintech, future of work, data AI, we're really looking for the sort of one outlier business. So that's a lot to do with founder. That being said, obviously, we're aware of the fact that there are definitely emerging themes and opportunities that we're seeing. One of which I think is really interesting, is, we've got now, I would say, like a bit of a kind of tech inequality almost. Like, we have some markets that are consistently so well served with products, tools, infrastructure. I'd probably put some, dev tools or productivity software into that category. By the way, we love productivity software. We've invested in Notion and Dropbox and Figma, but it's a pretty well-served user right now. Versus there's these other markets, offline, not sexy, old, antiquated, fragmented, whether it's farming or whether it's like dentists, or whether it's like recycling departments, which is an investment we did recently. Like, just really how meaningfully you can change a car dealer's or a fish processor's workflow in a way that's like so much better than what they've sort of known before. So we're looking at quite a few kind of, I would say, unsexy markets right now, and thinking about what products and services can help up-level them.
So, as I described earlier, we have a very bottoms-up, boil the ocean approach to finding things, right? So what we're really looking for are signals, and then coming up and asking, well, why does that exist, right? When we find momentum, we see momentum, and then we pull back and we're like, well, is there something happening in the market that suggests that momentum will be sustained over time? And I think there's a couple of trends that we've seen really emerge more on the forward-looking side. One is the continued platformification, right, of services. So if you think about what AWS has done for cloud, what are these other things that people are bundling to enable building to be easier and faster? And we're seeing that kind of decompartmentalized across the software building value chain. The other thing that I'm really excited about, because I spend a lot of time in our consumer portfolio, is I think for the first time we're seeing truly a new wave of social platforms, right? In the last few years, we actually have real viable competitors to the Metas of the world and the Twitters of the world, and I would say Linktree is one of them. And I'm really excited to see what this new generation of digital native, social native users are going to bring to the market when it comes to consumer tech and what social really means. In the more immediate term, I actually think we're really well aligned with what George has said, which is we're actually going back and just thinking, okay, are there sleepier things that we might have overlooked in this crazy upcycle, right? And for us, again, it's more signal driven. So are there these bootstrap businesses in Idaho that no one's been interested in for a while that actually have really interesting core unit economics and some sort of large enough niche product to build something interesting? So I would say in the more immediate term, that's where we're focused, but there are these bigger macros that we always have in the back of our minds that we're looking for momentum signals around.
And from your perspective, from a Linktree perspective, even from a creator economy perspective, like what are you excited about over the next few years at least?
Yeah, I think AI is going to be part of the answer. I think there's a few things happening obviously across the creator economy, and what's happened over the last few years is there's been explosion of creators actually entering the market, and more and more people creating. I think that's been through democratization of creativity, so democratization of digital discovery and enablement through something like Linktree, but through democratization of creativity through things like Canva, right, that's making that a lot easier. And I think that's the part that AI plays moving forward. Actually, I think it's a really interesting time for those that have creative ideas that now have, there's this kind of democratization layer again of people to being able to create, being able to get online, being able to get discovered, which I think is really interesting and exciting. Around that over the last couple of years is obviously this explosion and proliferation of creator economy tooling. I think it's natural to see a consolidation of that over the next couple of years. It's hard to tell where it's going to play out with the economy as to whether there'll be enough money being funded, like people paying these creators, and where that'll pay out. But we're paying close attention to that. Linktree creator economy, even though we kind of bucket it into that world, probably only about 35% of our users. We have a lot of big brands, a lot of small business, so I think we're a lot safer from that environment if that were to occur. But I think in terms of over the next decade, what I'm most excited about is seeing that continued, like the creativity and the discovery of those that otherwise wouldn't have been able to be discovered. It's quite interesting. Yeah,
no, awesome. That's awesome. I think before we open up to questions, which we will do very shortly, I want to ask you, Rebecca, you've been in Australia just for a few days, and Georgia, you've been here, I know, for a couple of weeks. I'd love to know kind of what you've learned, what surprised you the most about the Australians and the Australian startups that you've met.
I think that if it were any easier to get here, this place would be overrun with tourists. Life is just awesome here. I love it. So I think, I don't know that this is a surprise, but I've been reflecting on, what are some of the common attributes of businesses that have really made it out of Australia. And I think two things stick out to me. One is there's this different level of focus around and intuition around user experience and user delight. And I think if you look at Canva, if you look at Atlassian, if you look at Linktree, if you look at Dovetail, like these are all true, authentic, and we call it now PLG, right? In like the venture community, it's almost become a dirty term because everyone's so obsessed with it. But I think in Australia, there's this authentic intuition around how to build that. And I think part of it is because there's not such a deeply ingrained like enterprise boots on the ground sales culture, you've had to rely on how do you find that lightning in a bottle, right? And so when you actually do that, which very few businesses can figure out how to do, it is so, so powerful, because that is the essence of product market fit that we're all always chasing. I think the second thing is when you are able to find an Australian business that truly has global ambition, that gets really, really exciting, right? Because this is actually a pretty decently sized market, right? It's not too small to build a big business, but certainly too small to build a generational business. And so when you can find a founder that actually from day one is based here, but thinking globally, you have like almost a filter on level of ambition, because it's really easy to just settle into this market and say, I'll just be the Australian version of XYZ. So I think those two things have really stuck out to me. I think that as I've been just spending more time with people on the ground, with the Linktree team, and really trying to understand this Australia versus US culture dichotomy. First of all, I think there are way more similarities than differences, okay? It's just why it's really easy to come here and immediately feel at home. But I do think in the US, right, because life is harder, especially in New York, you really have to like earn your keep, right? And our social safety nets are just not as strong. And so it's like the day you get employed at a US business, it's like now you have the right to earn the spot to be here. Whereas here it's like, okay, you've earned it, like keep going. And so there's like an insecurity in the US where you always have to keep fighting for survival that can be really healthy for a startup, right? And so I think in Australia though, there's this relationship oriented, this isn't purely transactional for me, I want to go above and beyond for you because I care about you energy, that's also really valuable. So I think when you can fuse those things together, you have a really magical combination. And certainly I think that's our hope at Linktree, is we can continue to fuel both sides of what makes Australia great and the US great too.
I think that's a great summary. I think, my observations are, I actually think it's harder being a founder here and wanting to build a global business than being a founder in the likes of Silicon Valley. The reason why I think that is just purely logistical when it comes to time difference and time to travel, but also because from a kind of what is normal perspective, I don't know how many people have spent time in Silicon Valley, but you go there and everyone's building a startup or working for a startup. It's very much part of their identity. It's kind of like swimming along with the herd. So I actually think for the 0.5% of people who want to build a truly global business and have that level of ambition, I actually think it's harder to do here, which even gives, I would say, more conviction that they really want to do it versus kind of swimming along with the herd. So that's the first thing. I definitely resonate with the product-led growth point. I actually think on the flip side, though, you see when talking to enterprise SaaS businesses or SME SaaS businesses or businesses that actually require a level of sales team, the kind of thinking and the sophistication there is less developed, because the businesses that we have seen are, we will build it and they will come. So, if that's the case, fantastic. But if it's not the case, then actually up-leveling on a go-to-market sales team side, I think is, again, something that I've seen here talking to businesses. And then the third thing, and look, I'm based in London. We're kind of European roots as a firm, so we get the kind of US like more aggressive style and bigger pitch, and we also in Europe we like to take holidays, etc., etc. But I think if you ask, like I've been meeting a lot of founders here, and if you ask someone, okay, what do you want to prove like by the end of the year, and almost always they'll come back with like, I want this many users and this this much revenue, which is great and that's fine, and it's good to anchor to these kind of concrete tangible points. But if you ask, I would say, a US founder, or increasingly so a European founder, they would take much more of a kind of higher level narrative initially before diving down into the metrics. Like, I want to prove that the product I'm building is loved by my core customer base, or I want to prove that this go-to-market distribution is meaningfully more effective than what my competitor is doing. So it's like that strategic lens and the slightly higher level that I think as VCs, we're not investing in what you're going to get next year. We're investing in what you're going to get in 10 years. And that gives us belief and conviction that someone's got that sort of timeline. So I would say those are something that I think will naturally evolve here over time. We had the same thing in Europe, and we still have the same thing in Europe. As the ecosystem gets more mature and we see even more businesses of different types, not just product-led growth businesses, coming out of here.
Yeah, I think that's a really interesting point around the level of ambition, and also having spent time in London in tech, it feels a bit here. The US had this in the early 2000s. The UK kind of the mid 2010, 2015 started evolving, and I feel like we're just getting to that point here in Australia where the ecosystem is growing and the level of ambition is growing, but it takes time for it to kind of filter through and learn. But I think it's a really great point. Okay, we've got about 5-10 minutes for questions. Does anyone who wants to go first? Go on. We've got a microphone actually. Cheers.
G'day. I have a question. As investors, what's like the best deck you've ever seen, and why?
Good question.
That's a great question. Also, that's the first time I've heard "good day," which is exciting. I'm happy to kick off on this. I spend a lot of time actually building decks with the companies I work with, so I've done that, some of the hours here. I think the best deck is, well, it's a couple of things. It's being really clear. Like, I know it sounds weird, but clarity is so rare in a deck, right? Someone's reading that, probably they're spending initially 5 to 10 minutes, max 10 minutes scanning the deck. So being really clear and upfront about what you're doing and where you are, again, rather than having to dig through to page 10 before stuff actually, gets sort of interesting, for want of a better word. So I would say whatever the key headline is, whatever you're most proud of, whether you've hired someone amazing, or whether your traction's amazing, or whether your product vision is different, like put that up front versus let people dig for it. That's number one. Number two is, I think it's like a bit, I would treat venture capital investors as kind of like children. It's like paint by numbers. Like, don't make it overly complicated. Just be very simple and clear. Of course, there's a ton of complexity and chaos and nuance, but actually be super clear about and oversimplify to begin with. And really, the way that we like reading decks is like, what is the problem? What is the solution? And how are you solving it? And who are you? That's it. Right? So, spending like 6 slides on market slide, like it's our job to size the market, but also realistically at early stage investing, the market's going to change, it's going to evolve, it's probably going to get bigger. So it's just really being succinct and clear and being very upfront about why you are special, why you are a tall poppy from the get-go.
Great answer. Thanks.
I don't have much to add aside from the less time it takes to absorb the key information, the better, right? I think the point of the deck is catching an eye, but it's not going to be what the reason someone invests. So the whole point is, it's a binary thing. Am I going to talk to you or am I not? Right? And then we'll dig into the details.
Thank you.
Cool.
G'day again. Rebecca, you touched on valuation. Could you guys just talk and share thoughts around expectation gaps on valuation? We've seen a massive correction, I guess, in terms of public market valuations. Private markets are lagging a bit, but more importantly, from my perspective, I see a lot of sort of founder expectations. Oh, but we were valued at this 18 months ago. The comp on this was this last year. What are you observing, and how are you dealing with that?
I think that's a big part of why the deal flow is as tight as it is and slow as it is, because where funders are and where founders are on this question, the gap just hasn't quite been closed yet, right? I think to just put a very fine point on it, last year, if you were raising at a 30x plus ARR multiple for a business that's growing over 100%, which was very common, or not last year, like H1 2022, very common. This year, maybe 10 to 15x. Right? So like that is the degree of correction, and that's on average. Of course, there are going to be exceptions. If you have a generative AI business, this maybe isn't relevant to you. But like that's the level of disparity, right, in terms of what is market clearing right now. And a lot of founders just aren't satisfied with that yet. And that's fine if you're not satisfied with the absolute value of where that lands you today. That means you got to make your cash last longer and grow into your last round valuation. The other thing that people are saying is flat is the new up round. And I think that it genuinely is true for a lot of companies that are overcapitalized, right? Like there are companies in our portfolio, lots of companies in our portfolio, where I really hope we can raise a flat round as the next round. And it's probably going to take us a year or two to get there. So it's level setting, and it is quite a stark contrast.
Yeah, the only thing I'd add to that is, ultimately, I mean, because this is these are paper valuations, right? They're private, they're paper valuations. So ultimately, what a valuation has only ever been is supply and demand, right? It's like how, this is your business and how many people would like to invest in it, and therefore, what are they willing to pay? So, my view is like businesses are still going to be valued, like the great businesses are still going to get funded, and they're also probably going to be valued quite highly because, ultimately that's part of the competitive tension, right? If we really want to invest in a business and, we're investing in per partner, right, 1 to 2 a year, these are, when you invest in a business, you're really excited to invest in it. Frankly, if there's competitive tension, which we've seen already, you'll still be doing valuations that might not be public market comps. So I think it's still around, ultimately it's building a good business, and then the valuation speaks for itself. And I think this is back to the trade-off point. For a lot of founders who have raised at a certain valuation, it's either trade-off. Do you conserve the cash, grow into that valuation and hit the market in 2 years and see what you get? Or do you just take the haircut at that valuation? At the end of the day, again, this is a 10, 15-year journey. A lot of great companies had down rounds at one stage, and I think that's going to be normalized, and it's going to happen more and more. And it, also, shouldn't really be seen as a smear on the company. It's more just the nature of a lot of these different pieces.
I was actually going to ask about valuations anyway, so I'm really glad that was already covered. Given that's already been covered, what I'll ask is how limiting is it that we're here in Australia if we do want to go global? For me personally, I'm super flexible. I want to move to London or San Fran or wherever it is that business takes me. But I'm also wanting to be really strategic about making sure that I'm demonstrating the traction locally before going abroad. And I just wanted to get your thoughts on, what do you think is the best trajectory in terms of pace to go global? And where might be also the best place for it?
Yeah, happy.
I think it really depends on your business, right? So I don't think there's a one-size-fits-all answer. I will say it's probably easier to demonstrate traction in your local market, a bit early signs of product market fit, generally speaking, for most businesses before you set your sights to go global. But I think it really depends. And we've invested in plenty of businesses actually that have 50% plus, 80% plus Australia only revenue that tell us, but we have ambitions to go global. And we say, yeah, we see it. Like, let's go. So I don't think it's a totally binary thing from an investor perspective to say you've got to have majority in ex-Australia to ever be an ex-Australia business.
Yeah, so I'd say two things on this. One, I really like your instinct of getting to a certain critical mass in one market before launching elsewhere. I think what we typically see, and I say particularly in marketplace businesses, is where a marketplace will be like, it's first mover advantage. I need to nail these 6 markets all at once. We did that at Deliveroo, which is where I was at before investing. And what happened is we were just making the same mistake again and again. Like, we didn't have a core playbook and just really good idea of what worked in one market before we were then spending cash and time trying to do it in other places. So I think our general advice would be, whatever the core market is, be it Australia or elsewhere, like nail it there and then replicate it in other markets. And that's particularly, compelling from an investor perspective. It's like, we've nailed this. Like, we can show you we've nailed this, and you're investing on on the belief that we can nail somewhere else versus like, we've done a bit well in this, we've done a bit well in this, but like, it'll be better once we put more capital in. So that's the first thing. The second thing, there's definitely not a one-size-fits-all, but the latest Index Ventures handbook would say there is a 4-size-fits-all. So my colleague Dom Jackerson has published 2 books now, one on expanding to Europe, one on expanding to the US. And the data points behind that are 50 different kind of best-in-class case studies. And he's categorized those into 4 different company phenotypes when it comes to, are you a product-led growth company? Are you a what a SME sales engine type company? And really helping you calibrate, at least from what other companies have done in the past, whether it does make sense for the founder to move, out into the US, or actually whether you can, keep product and engine one geo and just build out a sales team in another. So it's free, it's online, check it out.
All right, we've probably got time for 2 more questions. Got one at the back.
Thanks, Ben. And thank you both for your great insights. No, pardon the pun. I just wanted to ask about hardware. Do you guys focus or look at hardware businesses with a software and ARR component?
Yes, but I will say it is the minority of what we do, and that's just our fund, and our focus has always been very much SaaS, software, and then when SaaS emerged, SaaS focused. But certainly there are businesses where the hardware actually is a great driver of stickiness, right? I would say for our portfolio at least, the approach to those blended business models we've usually taken is the differentiation long-term stemming from the software or the hardware. And for us, we're more comfortable when that comes from the software piece. And the hardware is just a kind of a necessary component to land the customer. But, you're more agnostic to where that supply comes from.
On our side, we've invested in driverless cars, we've invested in manufacturing robots, we did a recent investment in kind of defense drones. So we're actually doing quite a bit there. And I think particularly from a sustainability angle, we're finding quite a lot of businesses need a hardware element in order to really make an impact when it comes to supply chains, etc. So it's not the majority of our portfolio, but we're doing more there. And reach out to the guy that Alex was trying to reach out to, because he led quite a few of those.
What's his correct email address?
Yeah, exactly.
Okay, I think we've got time for one more question.
Hi guys. I was having a chat yesterday with a friend of mine, and we were kind of ranting about how great it is that we see as Australian startups and startup businesses our regional connections with Asia, specifically, let's say Singapore, China, etc., whether that's through people-to-people links or economics, right? Do you, as bigwigs in the Northern Hemisphere, also see that as a competitive advantage? Or is it more you kind of view Australia as one hub and then can go anywhere? Or do you actually see our engagement with Asia, specifically kind of Southeast Asia, as an advantage?
I'm happy to kick off. I think a lot of the businesses that it's actually kind of back to the former question around a lot of the businesses that we talk to when we ask around like what markets are you going into, a lot of them actually aren't Asia. It's like, I'm going to go to the US or I'm going to go to Europe. Now that might be, because we're familiar with the market, so therefore we're reaching out to products that may be, well suited to the market. But I was actually in a conversation sort of previous to this was saying how, it's funny, it's almost some people I think just say like, I'm going to go to the US because it's big and I'm going to crack it and that's the market. Like I'm building a tech business, next stop USA, which might be the case for some people, but actually if someone shows that they're thoughtful and intentional about why they're investing in a market and how they're leveraging their relationships or their insight or their sentiment, nothing's kind of off the cards or seen as a red flag. Like to take the counter example, we've invested in quite a few be it US businesses that are expanding more into LATAM, or even businesses kind of expanding across the African continent. So it's not a question of like, it has to be, Western in order to kind of tick a box, but I think it's more just showing and being intentional about why you're best positioned to take the market in a way that someone else, wouldn't be able to.
Yeah, I think it's however you can credibly defend that you have a big enough opportunity size, that's step one. And I would say on a relative basis, if a US company said, and we're going to take over Southeast Asia next, versus an Australian company saying, and we're going to take over Southeast Asia next, for sure, I would say, you have a much better shot coming from Australia. And that makes more sense, right, as your expansion lever. And one of our companies, Employment Hero, for example, that's exactly what they're doing. They had a really strong foothold in Australia, next stop, Southeast Asia. That's what we underwrote to, them being able to own that market. So I do think that proximity actually does give you an advantage. I would say from our perspective, China is like a totally different beast, and one that is just harder especially from an enterprise SaaS perspective, to go and nail.
Yeah. Great. Well, look, I want to say, actually, I've got one more question. One more question before we close up. What's the best way for people to contact you?
Yes. Linktree. Exactly. That has all of my contact information on it.
Second that.
Great.
Second that.
Fantastic. Okay, good. I'm not going to ask you. Look, thank you very much, both of you, for finding the time to do this session. Thank you, Alex, for suggesting it and putting it together. We have a little gift to give both of you, which is three very Australian things.
Wow.
One is some Vegemite.
Do we have to choose? Do we get all three? No, we get three. Oh my goodness. Thank you.
Some Vegemite, some Tim Tams, and a Side Stage t-shirt.
I actually think you need to try the Vegemite in front of us. Oh.
Wow, thank you so much.
No, thank you, and thank you all for taking the time out on a Wednesday morning to come and join us. Hang around if you want coffees, croissants for the next half an hour or so.